Welcome. If you chose this video, congratulations. You have done well in your savings and investing, and you know that you will be self-sufficient in retirement years. And because of that, you have choices. The purpose of this brief video is to help you evaluate the option of self-insuring versus transferring some of the risks of long-term care expenses. Most of the people I speak with who are choosing to self-insure are doing so not because they can self-insure, but because they really don't believe they're going to need long-term care. So let me ask you, are you surprised when people grow into old age? Are you surprised when people need care? So these statistics shouldn't surprise you. 70% of people will use long-term care. 50% of people who purchase long-term care policies are using their long-term care benefits. When we say we are prepared to self-insure, are we really? The only thing that is protecting our assets is our good health. The government only assists with long-term care expenses for those who have spent down all of their assets and they are eligible for Medicaid. And for those of you watching this video, this is not a realistic consideration. Long-term care planning is a logical part of financial planning. Remember, those with money typically spend more on long-term care. They want quality and consistency, and that costs more than the average. It is not unusual for the wealthier client to choose to stay at home with 24-hour caregiving or in assisted living with additional community nursing support, and if necessary, a private nursing home. So it is not unreasonable to estimate that the cost of long-term care will range from $7,500 to $13,000 a month or more, and that number increases every year with inflation. Men, on average, will use 2.2 years of long-term care, and women 3.7 years of long-term care. Keep in mind, this is just the average. How much are you truly okay with spending on long-term care expenses, dollar for after-tax dollar? So what does it cost? The cost of long-term care insurance is related to age, couple status, health, and policy design. But I can tell you that insurance leverages your premium for benefit, and with the multiple tax incentives, long-term care insurance is much more affordable than paying out of pocket. If you have a business, the premiums may be deductible, and the benefit will still be received tax-free. In Massachusetts, even a small policy protects a primary home up to $750,000 from Medicaid lien, and in 40-plus states, a partnership policy protects the long-term care benefit amount from Medicaid spend-down. So you have two options. Option one, create a fund for long-term care expenses that you can't spend on anything else because you won't know whether you need long-term care until after your death. So you put aside hundreds of thousands, if not $1 million, and when you need long-term care, you pay dollar for after-tax dollar from this account to fund your long-term care. In addition, you are potentially relying on your heir to determine how to spend their inheritance on your long-term care. And if you don't need long-term care, then you die never having access to this money during your lifetime. This other option is to transfer some or all of the risk of long-term care to insurance. You spend your assets knowing your long-term care is covered. You have leveraged your hard-earned dollars with the intrinsic value of insurance and tax incentives. And you have a very important benefit of coordination services to help you through the long-term care process. And you can choose the option of a cash benefit for simplicity and flexibility. It's your decision. Self-insure or long-term care insurance. For more information, you can contact me at linda@longlifeplanning.com or 617-201-2499. Thank you.